Hello, everybody, and welcome to TradeGate Hub's morning market update. Of course, I am your host, Eliman Dambell, and thank you for taking the time to attend the session here this morning. Of course, we are going to be looking at some of the events and occurrences which have taken place over the last 24 hours, but also forecasting to today and looking at some of the opportunities which could be derived from the markets later on. Of course, today we do have quite a lot going on as far as data, as far as fundamentals as well. So we will be getting into a lot of that as we do progress. But ladies and gents, before we do begin, as always, just please do me the favor, do me the honor of course, glancing towards the description where you will find a risk warning and disclaimer for this session. Now, in relation to this session, again, what we are going to be doing now on a weekly basis is having 3 sessions essentially on a Monday, Wednesday, and on a Friday. So after today, the next session will be, of course, to end the week, essentially reviewing, but also previewing the upcoming week. But in relation to today, the halfway house midweek, what we are going to be seeing is FOMC minutes. So later on today, we are going to have the Federal Reserve, somewhat release the minutes for last month's meeting. So we will potentially see some volatility derived from the report, which will be released later on this afternoon. Now, for those of you trading dollar-related assets, you will likely look at the potential for some volatility. And I think in relation to volatility, there's probably no better place to start today than Bitcoin. There's probably no better place to start today's session than BTCUSD, of course, over the last few days, to be honest, last few weeks, or last week at least, we have seen quite a lot of bearish activity taking place in BTCUSD. Of course, a lot of you will know this has mainly been due to tweets released by Elon Musk, the first of which, of course, we covered there on Monday, him essentially tweeting, "Indeed." Just the word "indeed" was enough to send crypto prices down damn near 10K. And of course, since then, where the bleeding hasn't stopped, we have seen the hemorrhaging continue. Of course, Bitcoin is now trading below, or at one stage earlier on, it was trading below 40K, which was the first time, I believe, in damn near 14 weeks that happened. Of course, you see since early February, we hadn't seen Bitcoin trade to the low. But of course, as we have seen, that level did act as a floor, and as we were looking at on Monday, the potential for it to continue to break out of that RSI level of 33 did essentially happen. Markets went all the way down to 26, and if we zoom out historically, you can see, to a degree, you can classify this area as being a floor, but there is still some opportunities downwards if there was to be any. Just bring this down there. If there were to be any further bears, you do have. And guys, to be honest, what happens is you have 2 types of traders at the moment. You have those who are still bullish. A lot of people here are looking at this as a great opportunity. Those who were unable to enter when it was at 60K. Those who felt overpriced. Those who may still be losing, but buying because they just have an inherent belief that crypto prices, Bitcoin prices, will, from a long-term perspective, go up. So a lot of people will still be buying long-term here. From an intraday perspective, what you are seeing are those who essentially entered from a perspective of reading the news, listening to the likes of Elon Musk, and essentially Bitcoin trending in a particular direction. And those would be the ones who are now selling out of fear, because the same reason that essentially led them to take those positions, take those trades in the first place is no longer there. So you aren't having the endorsement as strongly from Musk as you did before. So a lot of, I don't know, more, I would say, millennial traders are probably liquidating some of their positions now. And in liquidating their positions, you are having that second group who are taking advantage of this. And who knows, who is to say, I don't know, they're taking advantage. Is more a case of appreciating what we are currently seeing happening or unfolding right in front of us. And what I would say, guys, as far as the longer term side of things are concerned, you can see that weekly time frame does show us that there could still be some more falls there. The RSI is positioned to potentially continue into that downward trajectory as well. But intraday, looking at today and somewhat zooming in, what we can see, of course, that floor is being created at that level. Some bounces have taken place. But guys, if you remember on Monday, if you recall, we said, could there be bounce? It just didn't happen. So I think what we do need to potentially look at here with BTCUSD is one of two things. Firstly, look at the longer term timeframes, because even though if you are trading shorter term and some of those actions and activities are showing us signs of potential bullishness, in the longer term, we may see this as being the beginning of a longer term sell. I saw some tweets and quotes of some people now even panicking, believing this could be heading down to 19K over the next few weeks. So as we always know, guys, what goes up at some stage must come down. We don't know where the come down will end. We can definitely confirm that this is a come down. But as far as could it continue, are we going to see it essentially stop? Has it found its floor? All of those are still questions yet to be answered, but it's still a very, very interesting one to pay attention to. Look again at those moving averages as well. Try and see if the RSI is going to find its floor at one of these respective levels. And of course, if it does, then I do believe you will be looking at some buyers waiting in the wing. So that's Bitcoin. Next up, gold. Now, gold as well. Yesterday, we saw gold prices rise and rally into a 4-month high. And guys, what we have been seeing in the last 2 weeks in particular, we saw and have seen, I would say, quite a lot of negative data, not negative, but quite a lot of weaker than expected data coming out from the US, whether it be non-farm payrolls, which essentially, I don't know, they still rose, but they failed to reach expectations to the tune of around 700,000 jobs. We saw retail sales last week essentially remaining unchanged, failing to grow at the expected 1% rate, and so on and so forth. So you are seeing a lot of, I don't know, key metrics, key indicators, economic indicators in the US failing to somewhat reach the levels in which a lot of people have expected of them. And as a result, we are now seeing gold prices rise. So with the weaker economic data and weaker fundamentals from the US, this essentially is and has led to a weaker dollar overall. And of course, a weaker dollar story has led way to a stronger gold. And we are seeing quite a lot of investors flocking to the safe haven as a result. So as a result, we saw gold prices reach, again, their highest level in around 4 months. Now you can see the markets have hit that resistance. Since you have seen, of course, today, some red, some bearish candles starting to enter the fray. Are we going to see, I don't know, a sell-off, or are we going to see some consolidation? I think we're going to see uncertainty. I think we're going to see uncertainty between now and later on. FOMC minutes release, where we could potentially have some more direction come into effect. So I do believe that release later on, and pardon me, guys, as I'm speaking, I'm starting to get a bit of a migraine, so if I'm not coherent in any way, that's probably the reason why. But generally, what we are seeing, and with any economic release, what typically happens is, closer you get to that event, the markets which are most affected, they start to consolidate. You see them trading in modes and ranges of uncertainty. You don't see a real bull or real bear. You just see essentially sideways trading. And as we will receive that report or the closer we get to that report, you are going to start to see the volatility increase. You are going to start to see the ticks and wicks of certain markets essentially rise and fall. And for me, you can, of course, trade in those ranges, but I think what you will find is it's not really going to be a sustained move. It might be a quick spark for a half an hour, for an hour or so, just leading to a big candlestick being formed and being created, but it may not be long lasting. So for those of you who may be trading FOMC later on, the FOMC minutes later on, I think it's wise for you to consider looking at those shorter term time frames, seeing how the markets are developing, and just based on that, making your decision as far as where. I think before you even enter, you need to know where you're hoping to ideally leave. Before you enter, you need to essentially know how, what is your exit plan? How are you hoping to potentially leave that equation? So that's an interesting one. Of course, you have seen quite a lot of bearish moves there, and so on and so forth. So could we see that? If we had, I don't know, see if the minutes show us that the U.S. economy is I don't know, that, or the perception of the U.S. economy is better than we currently believe, then you may see some weakness coming out there. But at the moment, it is set up for weakness. But again, if that RSI level of around 70 is broken, I wouldn't be surprised if this starts to make a run for around the 1890 level at the least. So that's gold. Also, next up, of course, we need to look at the SPX. And as far as the S&P 500, guys, what we are seeing, again, in the last few hours, you have seen some drops, some declines, and we are seeing, again, the formation of potentially a floor. Looking at a daily time frame, yes, we are back at the floor. The market's somewhat capsized again yesterday. And now I think it's a question of, again, is this the floor? So we have seen that false breakout, came back up, it's fall down again. Are we going to have that rise? Remember on Monday, we said eventually time will show an all-time high would be reached. Of course, since then, what it take? And again, guys, this is what I said. We know it will reach that all-time high. That position does remain. The only thing that has changed since then, to be honest, is nothing. It's still a matter of timing. So even though a lot of people would believe and still will believe that this is heading upwards, you still have that intraday uncertainty. You still have, I don't know, 3 days of bearish activity since then. But when will the tides turn? That's still the question. When will the tides potentially turn? And in the shorter term, it's a case of asking yourself the question, this is the second time it's failed to really recover, it's failed to really rebound. So are we actually looking at further falls waiting in the wings? Could we potentially break out of this floor later on? Again, depending on that announcement from the FOMC, could we see further falls coming in this one as well? In the UK, of course, this was a week where we saw somewhat of the second or third phase of easing of lockdown, where we saw a lot of restaurants, a lot of bars, a lot of even sports. I was watching football yesterday, and I saw fans back in stadiums as well. So you are having quite a lot of hospitality sectors reopened, especially for indoor services. And of course, this is somewhat positive for the UK or the British economy. Yesterday, we also saw, I believe in February, it was confirmed that around 84,000 jobs were added as well, which was better than expected here in the UK. So you are seeing quite a lot of positives coming from Britain as well, from a data standpoint. But of course, this still hasn't been enough to really see the FTSE 100 continue to climb. And I think, again, as we said at the offset, the dollar is weaker at the moment. With the dollar weakness comes pound strength, dollar cable, which leads me to the next chart. Of course, we have seen that continue to rise, going back to that level we last saw there in late February. So with a stronger pound, this makes it harder, of course, for investors, especially foreign investors, to come in here in the UK and invest in the FTSE or in FTSE 100 listed companies. So as a result, we are seeing the FTSE somewhat fall to the wayside as a result. And what I will say is, there's two ways. Firstly, if you believe that is the ceiling, a lot of bulls on the FTSE maybe potentially looking for a reversal, maybe look at the RSI as well. Is it heading to that floor? Will this coincide with, I don't know, a reversal in fortune for the pound? Are we going to see sterling start to weaken? And if that does happen, especially at that range, can you see the correlation how a lot of bulls on the FTSE could turn bears on cable? So this is one thing to consider as well. The charts are somewhat aligned and somewhat pointing in that direction. So I think it's definitely interesting for us to pay attention to that story. And just looking intraday, looking at a 4-hour time frame, you have seen, of course, that decline there. Quite a lot of bearish activity has taken place here as well in the past. But where is the floor? Where is the floor? Realistically, it looks like we're probably at the floor already, and these, of course, are false breakouts. But look at the moving averages. Are we going to see the 10 EMA, of course, continue downwards against the 25? And if that does happen, are we going to see a move like this, a move like that? So those candlesticks do exist, but are we going to see them form in this instance to potentially repeat? Of course, so far you have seen that pushback the bulls have as soon as the markets hit that level there in the FTSE 100. You have seen the pushback, but will that be enough? Will that suffice, or are we going to see more declines essentially come as the day does progress? So guys, I'm going to look at probably, I don't know, one or two more. Again, apologies. I don't know what has somewhat triggered this migraine's come out of nowhere. So apologies for any lack of coherency there from my part. I think everyone has their, what do they say, their crypto night. And for me, I know Superman has his crypto night, and it seems to me migraines are definitely my crypto night in this instance. But another one of my crypto nights from a market perspective, I think recently is crude oil. To be honest, I've just despised looking at crude oil charts on a personal note recently. It's become very, if you remember the last few weeks, guys, we said this is clearly trading in a range. We've seen that $63 to $67 range is clearly being formed again. Last, I don't know, a few days, I believe on Monday, when it was trading at the floor, we said, could we see that bounce back up? Of course, historically, that support and resistance as far as the RSI 50 to 63 did really look somewhat solid. And of course, we have seen that be the case. That held firm at 62, 63, leading up to that rally to 67. And of course, since then, it was unable to break out. But yesterday, prices, of course, even though we had that bearish candlestick, in the end, prices rose to their highest since March. So you are seeing quite a lot of optimism and bullishness as far as energy prices, just mainly due to demand. Of course, the EU this morning announced that they will be lifting travel restrictions in the continent, especially for those who are fully vaccinated. Here in the UK, around 70% of the adult population is fully vaccinated. And I think when the sun starts coming out, or if you're seeing, I don't know, in the last 2 weeks here in the UK, it's been extremely wet. A lot of people now are starting to queue up and hope to get early vaccines and skipping the line instead of waiting for their turn, because I think people now are fed up. People want to be out there. People want to be able to travel without having to have multiple tests, the potential quarantines, and all of these things, especially in the summer months. So I think with 70%, 30% left, I think you will be seeing, I don't know, somewhat of an increased demand in vaccinations over the next few weeks and months. And of course, the more people we see get vaccinated, especially in the UK, that will open the lines because, of course, in Europe, one of the main tourist groups in the EU is essentially British holiday makers. So I think that could definitely be a big boost as far as increasing demand for travel, which of course will be a big part of oil and energy demand. And the EIA, which is the Energy Information Administration, recently said that demand for energy, demand for crude oil, is probably going to outpace supply, because of course at the moment at the moment, the OPEC plus cartel still hasn't come out and definitively told us what it's going to do with supply as far as increasing. We've seen decreases for a while now, but I think the time to essentially open up the production lines has come. So I think the next OPEC meeting will be very, very interesting to see how OPEC plan to answer those cries. Are they going to open up the taps and see supply match the potential demand, especially over the summer months? So I think again, until then, you're probably going to see that consolidation. So we're currently at 52. If we head to 50, I do see the markets remaining at that floor, potentially rallying back again up to 50, to 60, set to 63 as far as the RSI. I just believe that range could continue. If something happens which is out of the ordinary, I do believe we could break down towards that lower tier of 60. I believe today we have. So today I do think we have crude oil inventories out today or tomorrow. So I think that will be also relatively interesting to see how that comes in. That could for those of you who are trading crude oil, that could be an interesting thing to look at. Okay, guys, I'm going to look at two more. I'm going to look at two more, and then we are going to call it quits for today. I want to look at euro dollar. I want to look at euro dollar very, very quickly. And then we're gonna look at one more. I want to look at Aussie CAD as well. Now, euro dollar in the last few hours, let's actually have a bigger picture first. Similar to cable, of course, we've seen euro dollar. It's reached its highest point since February, around a 3.5 month high or so. And again, since then, today we have seen some bearish, some uncertainty start to creep in again. Historically, there is quite a lot of bears at this resistance. Moving averages, you have had that crossover. RSI is currently overbought, so I believe you are going to have quite a lot of people waiting and anticipating a potential decline at this level. But at the same time, you have seen this ascending triangle last quite a while. So is it essentially finished, or are we going to see it make a run for 1, 2, 3? That's, I think, the only question really here. It's either that or we're potentially going to see the ceiling hold. The ceiling so far has been broken, but is it going to mature to a forced breakout like it did the last time it was here back in Feb? And I think that's what we're waiting to see. If not, then I do believe you may see this continue to run. If not even to 1, 2, 3, to somewhere around there, 1, 2, 2, 7, 9. I do believe that could be the next resistance, just based on what we see there. So this is a wait and see. But again, where we are with the RSI is pretty much, or looks to be, the deciding factor as far as where this could be heading next. Okay, euro dollar, guys, one more. And what I want to start doing with these sessions on Friday or Monday, Wednesday, Friday, guys, I want this to be as interactive as possible. I want you on the TradeGate Hub chat to even be typing the markets that you're looking at, the markets you would want us to go and analyze, because again, these sessions are here for you. These sessions are here to give you an overview of what's happening relative to the markets you're most interested in. So on an intraday basis, whether it's Monday, Wednesday, or Friday, any of those sessions, just please always be as interactive as possible. Type away your suggestions and things of that nature, and we'll definitely do our best, if we have time, to look at some of the charts that you are potentially looking at. So what do we say? We want us to look at AUDCAD to end the session. Let me just replace this with my, okay, there we go. So if AUDCAD, the reason I want us to look at this, I believe earlier on in the week, actually yesterday, we have consumer confidence numbers coming out of Oz. I haven't really checked the figures as of yet, but I just thought there would be some volatility coming out of that part of the world. Looking at the charts there, it's fairly good timing in a sense, because yesterday you saw, or earlier on, we've seen that resistance somewhat hold back to floor, and now at floor, you're probably asking yourself this question: Is that happening there? You see the candlestick so far signaling uncertainty, but what is going to happen with that uncertainty? Zooming in, you have that crossover of the moving averages. Has happened downwards, but now the potential for it to happen upwards. Could that happen? And you can see those green candlesticks there. Is that a move which could potentially be on the card? So very, very interesting. A lot going on this week. And then this doesn't really look, it should be an ace. Let me just remove this. It's probably more of a descending triangle there. So are we going to see the end of that descending triangle? Are we going to see a breakout upwards? And relatively speaking at 39, so we are closer to being oversold and overbought. So there are potentially a lot of bulls waiting in this. But guys, as far as bearish, I'm feeling absolutely bearish with this migraine. So I'm probably going to go ahead and take myself some painkillers. But guys, it's been an absolutely great session. A lot happening today. FOMC later on as far as the minutes release for last month's meeting. So do have a look at TGH. You are going to have Mike V on later. You are, of course, going to have the coach himself, Del P on later on. So there is quite a lot happening. There are quite a lot of great voices to be heard over the course of the day. So please continue to stay tuned to TGH for all of your news and analysis. So it's been a great session. I will see you back on Friday. All the best, ladies and gents. Take care. Bye-bye.